Kalimera Anthropos, welcome everybody to Economica, all about economics and finance, and an update for me in less than 3 minutes. So, usage of Bank of England long ILTR, long-term repo, drops to 3-month low after cost increase. So, as I reported in my previous content, only reading about the changes that the Bank of England was going to implement, Reuters has correctly reported that the ILTR, the usage of the ILTR, it has fallen to the lowest in nearly 3 months, because the largest auction was of 6 billion, and it says here that 1.2 billion have been allocated. And why? Because the Bank of England has introduced a 3 basis point spread in the clearing auction also for sovereign debt, and it's actually here. If we see the latest data, you see here, okay, level A, these are the 2 auctions which have been implemented on the 18th of November and 25th of November this year, where the level A clearing spread, there is a 3 basis point, so it's an additional cost of financing, and you can see 6 billion, then it's 1.2 billion, and this week 597 million. So the overall amount of liquidity that banks are trying to they are trying to take from the Bank of England using sovereign debt as a collateral, it has been decreasing because the cost of the LTR has been increasing. But nevertheless, the STR, the short-term repo, this week, and today is Thursday the 27th, so there is another auction, it has increased. And I am looking at the yield curve as an hawk, because just to see, because today it's Super Thursday, I want to see if there are any jitters in the bond market in terms of yield curve, because today is 27th and there is 96.6 billion in short-term repo are expiring, and there is the refinancing, and you see how the bond market moves around a little bit, becomes more volatile. So that's a problem of the Bank of England. And last but not least, I'm really glad that you are all claiming very, very strong